And a sharp depreciation of the domestic currency in the past couple of months has raised concerns. On Monday, the rupee registered its steepest single-day fall in nearly 2 years, closing 66 paise down at a historic low of 86.70 against the US dollar. The previous record one-day fall of 68 paise occurred on February 6, 2023. However, on Tuesday, the situation improved slightly, with the rupee closing the day 8 paise higher against the dollar. Now, this decline is leading to higher dollar hedging costs for Indian companies, making offshore borrowing more expensive. The rupee's sharp fall against the dollar in recent months prompts the question: what exactly is causing this decline, and how does it impact you and me? My colleague Rutangshu breaks it down for you.
So we are here to declutter this and try and make you understand why is this a problem and how it impacts you. Firstly, what is causing the fall of the rupee in simple, clear terms? Let's break it down to you in 5 reasons. Number 1 is the high demand for dollars. When India imports more goods like oil, electronics, etc., more than it exports, there are more dollars required to pay for these imports. Now, this increases the demand for the dollars, pushing the value of the dollar up and the rupee down. Second is oil prices. We know that India imports a large chunk of its oil requirements. So if global oil prices rise, as they have been for the past 5 months, India has to spend more dollars to buy it. This increases the demand for dollars, again weakens the rupee. Then there is trade deficit. What is trade deficit? Very simple. When the value of what India is importing is exceeding the value of what India is exporting. A large trade deficit means India needs more dollars. Again, we have told you what happens. Then there is geopolitical tension. That's reason number 4. Global events like wars or political tension like we are seeing in Europe and the Middle East can make investors cautious. Then they'll prefer stable currencies which they see as safe havens, such as the US dollar. Again, strengthens the dollar, weakens the rupee. And finally, India's own economy. The economic growth is slowing, inflation is rising. Lower foreign investment in India can also reduce confidence in the rupee. Now you may ask, how does it impact me? Number 1, if you drive a vehicle, if you consume cooking oil in the kitchen, you are impacted because, as we said, India imports most of its oil, which means weaker rupee means increased oil prices. Your transportation, all other logistic costs increase. Then are imported goods. Anything imported like electronics, gadgets, even food items, even components of gadgets become expensive. So if you're planning to buy a smartphone or a car with imported components like even a silicon chip, you will feel the pinch. Travel becomes expensive. So if you're planning to go for an international trip this summer or even planning to go abroad to study, it will cost you a lot more because you'll have to spend a lot more rupees for the dollar equivalents. Then there's higher inflation with imported goods and raw materials becoming costlier, as we've told you. Also savings and investments. If you invest in mutual funds or stocks with significant foreign exposure, returns will be impacted. There's only one positive side. If you have relatives abroad, the money they send you will fetch you more rupees.